Good morning, everybody. So let's move on to the Dow. So with FOMC yesterday, I was expecting the Dow to hold its ground, but clearly that's not the case. So I think what we need to do here is we need to start assuming that the potential for more downside is far greater than the potential for more upside. Okay, now there's two things that we need to worry about, and now I'm gonna draw this line like this. So you can see how, if I look to the left, how we are lining up. We've got one, two. Okay, so we've got a couple of touches on this trend line. We tested it there, we tested it there, we tried to break through, we failed. We tested it again, and now currently we are sitting below it. Okay, so that's on the weekly side. Now let's just get this level in here. And that to me was the original downtrend, and we're going to see what happens with that shortly. So you can see this is a triangle. Okay, now the green line that I've drawn here is obviously our Tkinson. So let's just make it blue. Now we know it's a Tkinson on the weekly, and let's just drill down and see what's going on here. Okay, so the big area of resistance that we're going to have is this flat 200 EMA. Okay, now when the 200 EMA goes flat like this is really a warning, because when it starts pointing down, this thing is heading to the downside. So what I was expecting yesterday was, with this rejection bar off the level, I was expecting us to come to the upside. Okay, and I was looking at this line slightly differently. Redrawn the line like that. Okay, and I was expecting us to have another test in this area, and especially when we rejected Kijinson like that. But clearly that is not what's happening here. Now you can see we still have this bullish cross of Kijinson and Tkinson. Okay, we are in price with Cisco span, but I suspect that this is going to break through shortly, and I also suspect that we're going to get a bullish crossover. We're going to get a death cross of Tkinson and Kijinson under the cloud. So in other words, what we're looking for is a blue line to be underneath the red line. And you can see when blue is above red, we are trending to the upside. When red is above blue, it's typical of a downtrend. Okay, now if we get a crossover, a death crossover here, and we break this trend line properly, well, technically we have broken it. So we did close below it here, and we opened and we pushed back in. So I'd like to see what's going to happen today, but I think any longs are going to be short-lived. So the next area that we can look for a quick long is going to be on the bottom of this pin bar here, but I'll show you now where I think that's going to go to. So for me, 1, 2, 3 touches, we broke out, we've come back into the triangle, we broke out again, come back in the triangle. So we can either say that this is the new triangle, okay, and we delete that trend, so we can say that this is the triangle that's been formed, and we can also just do that. Okay, and you can see now that we have a triangle on a trend line. So this is the trend line, and these are the triangles. Okay, just let's use a different color. So that's the triangle and the triangle break. Okay, so we've had a daily close below this short-term trend line, and it's also daily close below the long-term trend line. You just get down to the 4-hour, and yeah, what can I say? But you can see how the 4-hour Kijinsen held up price beautifully with a proper rejection bar, and this was during the minutes. So as the minutes came out and the market started enjoying what they were expecting, and the price was coming up, and immediately the seller stepped in and pushed it back down, and they pushed it back down quite substantially. If you take at 300 points that they pushed it down. So I think it's safe to say that there's no intention of this asset going higher at this stage. So what are we looking for today? So there are a couple of things. So obviously this 200-day moving average is going to offer resistance. There's no two ways about it. If we do break through it, okay, which is a distinct possibility, then what we need to do is we need to just come back to the daily, and that is your next level. Okay, and then failing that, that will be your next level. Problem is, if we drop below those levels, there is nothing really to stop it. So there are a couple of this area of congestion here may be something that'll work. This area will work. This area will work here. But look how far down that is. And then the next level of congestion is down here by 18,500. So, and the other thing that you need to, I think, to be very worried about if you are holding longs on any US stocks right now is this could be seen as a flat bottom triangle forming. So you can see how we're using kind of this zone here as a buying area, and then the selling is coming off the trend line. And what I can do is we can just adjust the trend line to do that. Let's just adjust it like that. Okay, get rid of that one. And now you will see, so we do have a triangle, but we also have this flat bottom triangle. Okay, so a break below these tails here, these tails and these tails here, that spells disaster, because you're going to be looking at a move of down to the 20,500, 20,000 area, which kind of lines up with, there we go, with this tail here. Okay, so yeah, and you can see there are lots of Brooks gaps on the way up. So anyway, let's just get down to beyond that. We want to see if there are any swing trades for today or any day trades that we can set up. I'm going to go straight to the hour. So the first logical, I just want to get rid of that rectangle. The first logical area is going to be this 200-day moving average. Okay. If we're looking for the short-term entries, a revisit of the pivot and the cloud, you can see how we have Kijinsen and Dickinson's already moving down, but we do have a breakout retest there. So that would be an ideal area for shorts, and it also retests the range break. Okay, sorry, the triangle break, the short-term triangle break being the green line. However, the long-term trend is by the pivot. So I think that to me would be an area to watch for a short. and your stop is going to be above the cloud. So you're going to be looking at 180, 200 point stop loss. So make sure your trade can handle that. So that's the first area for a short. And take profits is going to be quite simple. And I'm not even going to bother looking for anything beyond that. So the 200-day EMA is going to be the take profit area. I'll also hop in here for a quick long scalp. Let's just look to the left, just double check. So there is a tail there that hasn't been tested yet. Okay, there is a little Brooks gap here. So there's a little Brooks gap. Okay. There's another Brooks gap and breakout. So there's a breakout with a Brooks gap. And then obviously we've got these tails here. So there's a lot of resistance down below. But this will definitely be the first area of profit taking. It's too big a level. And what you may find though is you may find a short little bounce up and then a move to this level here. And that is really that's a 50-point level. So it's just not even worth it. I'll just take profit here. Watch the price action on a low time frame, like the 10, 15 minute, and just see what happens. If it starts setting up for a move to the upside, then get in here and see if we can do a retest of this area. So that's kind of what I'm looking for. I don't think the upside's coming at this stage. It was looking promising yesterday with the setup that we had yesterday. I mean, especially with this rejection bar here and then continuation, you would have thought that was our double bottom and we're pushing up to the upside. So this could still be a little bit of a double bottom to a push back to here as well. That's another scenario. So it could push all the way back to this level. But I somehow doubt it. I think the daily pivot also lines up with the Brooks gap here. There's a Brooks gap there. So I'll be looking for shorts, but they're going to be short-term trades, short back down to the 200 moving average. And I'll take a stab at a long here, but really just for a retest. If we're lucky, we may get back to this level, but I doubt it. And the last thing you need to worry about is where are we here? So right now this is a range. Okay, so we could form a base here, move up, could move all the way up, and then come back down and break down to the downside. But if I just look at the higher time frames, specifically on the 4 hour, this has gone up. It's tested the breakouts really. So here's the previous breakouts. Okay, so you can see there's the previous breakout. So it's come to test that. Even though we already reached that target, we've come to test it again. So that's kind of what I'm expecting. And if we just copy that now to the downside, you can see where we are heading. There's a tail there. There's a breakout over there, which lines up with the block. So that's kind of what I'm expecting. Some more downside, and it's going to break the triangle. And the other thing that you can also just take cognizance of is this triangle target is going to be, there's two ways of looking at it. There's the one way, the way I do it is like that, which lines up in the same area. So yeah, I'd expect a bit of I'd prefer a pullback. Let's not say expect. I'd prefer a pullback back to, let's just get to the daily. We know what we're looking for. Pull it back to the daily pivot, and if we can get back to test this breakout here, which is 24,000, short from there, and looking for take profits here, see what price action does. If it comes back to test the break, then get back in for another move down to actually push through the trimmed EMA and head down to this level, which is 23,600. Okay, guys, so that's the Dow. Hope it helps. Sorry, the messy chart, but yeah, there's a lot happening down there. Anyway, catch you guys later.